Hey everybody, this is Jim at SB500chart.com. It's 9:30 on Saturday morning, January 25th, 2014. I just uploaded the weekend weekly review, and I saw how long it ran. I had no idea that much time got taken up in making that video. So I'm making a short version that cuts to the chase. If you want to look at the long version, that's fine. I'm going to post both of these, the short and the long version. Both of them, I have to do this first, and that is the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts, and obviously I talk way too much. Honest to goodness, that video was 27 minutes long, and I just had no idea. I thought, well, it's about 12, 13 minutes. Uploaded it, 27 minutes. So let's cut to the chase. If you want it fleshed out ad infinitum, look at the long version. But basically, we are coming down on a level right here at about 1786, 1785, where if the market fails to bounce, then we are likely setting up, well, if it fails to bounce here, then we will take out the lower rising channel line that has been working since November. Okay? Now, I've added two new lines on this chart. They're this, call them kind of a greenish gold color. I will show you what those are in just a second. If this breaks, then this line speculatively may help us out, okay? It may not, but there's a possibility it could, and I'll show you what that's based on in just a second. This is our blue line. This line is the one that is critical. This goes all the way back to the market bottom, March 9th, 2009. It tags again October 3rd, 2011, and again in starting last fall, where we began this nice leg up. So there's this is the line that we are currently resting just a fraction of a percent above. So if this line were to break, then you have to consider that that this overall trend that has lasted for nearly 5 years could be in jeopardy. And we could be just rolling over here. But that's still a little ways underneath us. I mentioned another line that is very speculative, and that is that kind of greenish gold, for want of better terms. And the reason I'm putting that up here is simply because sometimes when you have a rising wedge, which is what we've had since October, we talked about that yesterday, and a lot of times when you have a rising wedge, it may serve just to take you from a bottom support line to an upper resistance line. So if that's the case, we could find support at this level. If we did not have this line, however, then I would be more inclined to say, no, we're going to come down and test this instead. So this is kind of speculative. It may work. It could. But one thing that's working against this line, to be frank with you, is the fact that we do have between here and here, since the middle of October, this is a broadening pattern. And broadening patterns tend to, when they break down, and they're not confirmed until they break down. Just like our 1890 target was not confirmed until we got over 1850 by a decent margin. We never did that. So this actually ends up being a small double top that has a target that is just a little bit lower than where the market closed on Friday. So there's a chance for a bounce here. If this breaks, then we would measure this pattern the same way we would measure any other kind of topping pattern, and you look at the distance between the top of it, which I would say is when we tag this line here and this bottom line, and from the point it breaks down, you can see that that actually points us to a little bit under 1720. So let's see what happens. If we don't bounce here, then I think it is almost certain that we come down and challenge this line in the 1740s. And really, that line is higher than what the target would be from this broadening top. That would seem to be saying this line would break and we would potentially come down to challenge our blue line that is currently at about 1680. Of course, that we wouldn't tag that tomorrow. So it could be, if that line does get tagged, it could be, some weeks in the future. It could happen in the low 1700s. So guys, kind of an ugly day. Sadly, if you are a bull, you did not get that breakout. You did not get that bounce that seemed to be teasing us. With that little, we did get down underneath this line on Thursday, but we closed just a hair above it, and that was kind of a tease. So instead now, yes, this pattern has broken our rising wedge. The wedge alone also would carry an implication that if we don't bounce here, then we would come down to the levels that were in place prior to the formation of that wedge, which I wouldn't take that too literally in this case, because this is major support. This line has been alive for almost 5 years, and our wedge has been alive for almost 4 months. So this line, I think, would exert more support than hopefully than this wedge would supply in terms of selling pressure. So hey, let's real briefly talk about the week. Well, I'll be honest with you, the week stunk. I kept thinking, give the market the benefit of the doubt, give the market the benefit of the doubt. And as I mentioned, if we'd gotten over 1850, we had a nice target in the 1880s. That's now 90 points above us. We're looking at a busted pattern in terms of this rising wedge. If we do not bounce at these two lines right here, then there's going to be some more pain ahead for bulls. And again, if you want more details, listen to the long version. And I'll just say one more quick thing. Coming into this week, we knew we had resistance at 1850. I don't think that was not a mistake. That was a very good call. But what we didn't know is whether or not that resistance would break, because we do not have a big driving influence underneath this market right now. And I started the other video off with the idea that this is what it looks like in the big picture. So in the big picture, we're still way up here, and we could go higher. That would not be the least bit surprising. But in the big picture, back when we had this large inverted head and shoulders pattern back here, that pattern alone gave a chart reader a target that lasted for 2 years. Once we got over 960 back in the summer of 2009, 1340 to 1350 was in the cards. So for nearly 2 years, no matter what else happened in the market, there was an overriding goal, an overriding target that had a high likelihood of being met in 1340 and 1350. That was why I started doing my YouTube channel back in October of 2010, because I was just really tired of hearing all these bears telling people that we're now going to come down and we're going to end up at 450 or 460 or something like that, because I knew we had this big pattern back here, and apparently those other people were ignoring it. So to make a long story short, where we are now, we do not have the benefit of any large supporting thesis that gives us a target at all. We're just up here trying to figure out, by using trend lines, when do we find a top. So guys, thanks for watching the short version of the video. If you really like the sound of my voice, go listen to the long version, or if you feel that, wait a minute, that seemed too quick, let's, do the longer version. But I'm going to try to keep these a little bit more succinct. So look, take care. Thanks for watching. Thanks for your support.